Okay, good morning. Let's get right into the stock market technical analysis. So we're going to go through the broad markets, look at what's going on. The dollar obviously is important right now. I think you need to everyone needs to watch the dollar, and the bond yields are also very important. So we're going to continue to talk about that, looking at that. Guys, if you're new and you find value in trade ideas, trade setups, stock market chart analysis, drop me a thumbs up and subscribe, I think is the minimum you can do. Also, as I go along, maybe if you're brand new, just follow along for a little while. But if you like what you see and you're interested in how I'm putting these trades together, check out my stock market technical analysis course. It's basically multiple videos and concepts broken down into single topics, and then I kind of set a full checklist up so you guys can really have a complete idea of how to find trade setups. So check that out. I priced it affordable. It's not price gouging. I'm not trying to charge, thousands of dollars like some of these other guys on YouTube. At the end of the day, I'm trying to give you guys a course and a lesson in how to analyze charts and how to find trade setups, and that's it. I'm not going to promise you you're going to get rich day trading. I'm not going to hold your hand and all that. At the end of the day, I can give you some information. I think it's well worth the money. So check that out if you're interested. Link in the description below. And then if you want to get additional market insights or additional trade ideas to really go along with the information you've learned in the course, join my private member group, okay? I've already been in there this morning. I gave you guys snow already this morning. It profited 3.5% basically right off the bat this morning. So again, I'm throwing out trade ideas as I see them, and I can get information out a lot quicker in that format. So if you like that kind of format and you want to get additional trade ideas and setups, join the membership group. Link in the description below on that one. Again, it's $5 a month. I'm not out here trying to price gouge anyone for sure. All right, let's get into it, and we'll talk about triple Qs. So triple Qs, what do we got going on? This is the 30-minute chart. Let's go to the daily just to see where we're at. We have on the daily chart, I don't have any divergences really. The key thing that everyone's watching is the June lows, which is right here. All right, the June lows are sitting there at about 269.50, and we are just above them. But so basically the bulls are going to look for a double bottom. All right, and the bears are looking for this to break down. Now, I would think we'd probably get some sort of a bounce here and then maybe break, but we don't have to. We could just break right through and plunge. So we'll keep an eye on that. Let's look at the hourly chart. So on the hourly chart, I marked this potential top here. Again, I only have 2 data points, 1, 2. So it's really not a valid trend line that we can consider. However, I just kind of marked it out in case we get a bounce, maybe we get a reaction and we get rejected up there. Okay. We also have this zone of support, former support, and then we broke down. If we rally, we could rally up to there, and maybe they come in together. All right. That's the potential upside that I see right now on triple Qs. And yeah, that's probably the most upside I see. On the downside, I did go down to the 30-minute chart, and I've kind of got this little trend line marked out right here where we've been trading at for a few days. We've been hitting this as support, but you can see, boom, we just broke it within the last, little bit. So, I think there's more downside, to be honest. I just don't think there's much of a bounce in play. And I keep talking about the potential for the crash scenario. I just think if you're going to crash, it should happen now, right? When you hit the double bottom, just really don't bounce off of it and just crash, And if we do get that crash, then my target right now is about 238. I keep talking about that level. It's right down, it's down there about, from where we're at now, it's about, 11%. And again, I continue to look for that. So that's it on that. On the hourly, we do still have the bullish divergence. There it is. So we that's why I marked this out right here, because maybe we're making a potential bullish falling wedge pattern. So I'm I'm open to that, and I do want to continue to watch this. We do have the bullish divergence on the RSI. We do not on the PPO. That has been taken out. So before it looked like that, but boom, it's no longer there. So can get rid of that. And because of that, because we burned through it on the PPO, I think we burned through it on the RSI too. All right. That's really my gut feeling on that one. You can look at the Nasdaq futures. So here's the futures, kind of the same setup. Boom, broke down. So that's a sell signal on this hourly chart. We just broke that trend line. We'll see if that sticks. We have there's a little bit more time to go for the hour to close. So maybe they buyers step in, they snap it up. So again, and then the Nasdaq futures, I don't trade futures, but Nasdaq futures, I think you probably could rally to about right there, which is about, 11,923. I pointed out the rally, the area where I expect the rally to die or end in triple Qs if we're going to rally. And then I've pointed out the downside I'm looking for. So that's it. Just, watch the price and act accordingly. On the SPY, here's the daily chart. You can see we just took out those June lows, just barely. Here's the June low sitting about 362.20, and today we dipped just below them, 361.16. Right now we're back there, we're kind of back at support. So we're in an area of support. That you would expect some dip buyers to step in here. So stay open to that. If we just start to break down right here, then again, my target on the downside remains right there at about we'll just call it 339, 340 level. And that from where we're at now is about 6% more to go on the downside for right now. Okay. On the hourly chart here, you'll see bullish divergence on the RSI, no longer there on the PPO, so we can get rid of that one. So it's just the fact that we had the divergence on both momentum indicators, and we've already burned through one of them. I think we burned through the other, and I do think we kind of crashed down. We haven't seen any kind of real fear trade where we've just started crashing. And by crash, I mean just a swift 10% drop or something like that. And I think that's what it's going to take to flush out a lot of the retail money and everybody who's, they're still hanging on. They still are holding on to hope. We need to see them really panic sell for this bear market to take a breather. And that's my opinion. Bonds, all right, TLT continuing to drop. It's kind of crashing. And the fact that the bonds and the bond market is crashing has bigger... it's going to cause some problems in again with the pension funds, CalPERS. A lot of these pension funds they have to be conservative. They can't just load up on stocks, and they have to do bonds and stocks trying to get returns. And yet, bonds and stocks are both suffering this year. So it's just not looking good right now. And we have no bullish divergence. We have a downtrend. That's it. If you look at the bond yields, which is TNX, so this is your 10-year treasury. We go to the daily, it's starting to go parabolic, meaning interest rates are spiking higher. Everything's going to start breaking unless the Fed comes in here pretty quick and starts to backpedal, or they're going to have to pivot. If they don't pivot and come back and say that basically they're going to be a little more data dependent, or they need to monitor. They're monitoring the bond market, and they need to make sure that we have a managed interest rate rise, something like that. If they don't do that and they come out and start talking and walk kind of help the market out, or at least the bond market, we're gonna start to have some problems. For one, the federal government has to finance itself, and the way it does that is by selling bonds. It sells treasuries. Well, if you go back and look on, pretty much back to last September, we were about 1.3%. We're almost at 4% now, so almost a 300% increase in the interest rate. That's going to have a real impact on the government's ability to finance the debt, all right? And that's really what it's coming down to. So Again, I think interest rates will continue to rise in the future. When I look at the weekly chart, I see the potential of the end of the bear market in interest rates. So that's interest rates falling since 1981. I think to me, it looks like, okay, we're ending this. This is the end of that. And we're entering a new environment where interest rates will continue to rise. And that should continue to put pressure on the stock market. I've talked about how I think we could go into a bear market for 10 years, 15 years, 20 years. Nothing says that the market has to come right back. Okay, the market has come back in the last 20 years. If you go back and look at 1981, the market's really come back every time we've had a recession because the Fed has been there cutting interest rates ever since 1981. Now, if the Fed's not going to be able to do that, then as we sell off, there is no Fed there to step in and cut interest rates, which means that stocks might not recover for 20 years. It's completely logical. And flipping over to the dollar's reacting to the interest rates. As the interest rates are pretty much going parabolic, so is the dollar, and that's the problem right now. This is where the issue is. So I suspect that we're going to hear something from the Fed. They can't allow interest rates to just spike like this unless they're willing to put America into a Great Depression. And maybe I'm wrong. Maybe I got it wrong. Maybe the Fed is willing to put America into a Great Depression, and the federal government is going to default on its debt, on its treasury debt. Maybe that will happen. There is not that, that could happen. It's just not probable. And at the end of the day in the market, we have to work against probabilities. We want to put our money on the probabilities. There's no guarantees, but it's all about probabilities. So right now I'm thinking the probability is that the Fed is going to have to come out here and stop the rise in interest rates. So if that happens, we're probably going to get a rally in the market, okay? Tech stocks and everything. The market will probably have a pretty impulsive rally, kind of a short squeeze. That is possible, okay? Doesn't mean though we might crash first, and that's what I think is going to happen. I think we crash down another 10% or so in the triple Qs, and then we get that reversal. I've talked about that the entire time, but let's look at gold, because gold is, again, likely going to see a rally if the Fed comes out. So on gold, on the daily chart, you can see we are making a new low in gold bullion right in here over the last couple of days. We do have bullish divergence. It's still there on the daily. Look at that. See the RSI? See how it's turning up? It's holding that divergence. So there it is. The PPO is still pointed down, so we need to see that turn up over the next few days to kind of confirm that divergence. But we now have, we basically have divergence. This is actually the first time we've really had it. This breakdown from the 1680 has been all divergent lows. So I'd put the probability, I think that this is probably near the low in gold. Not necessarily the low, but near the low, because we obviously could continue to diverge, or we could burn through the divergences. But right now, I'd put the probability that this is going to be a false breakdown and it's going to snap back up. But until we see that, until we see a recovery, and in my mind, ideally, I'd like to see, you could maybe mark a little trend line right here on the hourly on gold. But the best thing would to see a recovery of 1680. You start to get that, you see the recovery, it's likely going to be a pretty impulsive rally. It's going to be a bear trap, all this price action, and gold will likely rally. This this is going to probably happen if or when the Fed comes out and, kind of pivots, basically. Okay, so the miners, just cover them again. No real change from yesterday. Big takeaways on the miners. You look at the daily, the gold miners, bullish divergence. It's still there, so it hasn't been taken out on the RSI. And then the PPO, there it is as well. So, we're continuing to drift lower, but with bullish divergence. And I think the miners are starting to sniff out the fact that the Fed's going to have to come out soon, is really what I'm looking at. So I don't see a reversal. I don't see a reason to, buy the miners yet, but they're all up today. And I'm just seeing signs that look at HMY gapping up pretty strong there. They're up, and they're just showing signs that they're bottoming or near the bottom. So this is probably going to be, again, I've talked about it for the last couple of weeks. Basically, I think these miners are likely going to be one of the best long trades coming here in the near future. We don't have a buy signal. I'm not buying the miners yet. Again, I've talked about how I got out of my miners. I had Barrick Gold and stuff. I used this rally right in here to get out of those, and I'll get back in though when I start to see signs that they're ready to run. Because again, there's no guarantees. We have bullish divergence pretty much across the board. You can see here Barrick bullish divergence still there, making a new low. We just don't have buy signals. We don't have a breakout. We don't have the confirmations we need. So it's a waiting game right now. And that's the thing. The Fed's playing chicken with the market. They're basically, the market's likely going to call the Fed's bluff, and the Fed will have to, pivot or at least ease back on their hawkishness in some way or the other. But right now, it's the market and the Fed are kind of locked into a game of chicken. So, the market's probably going to keep selling off till the Fed, eases off. All right, let's look at some trade ideas, individual trade ideas. Guys, again, if you're interested in learning this as a skill set and really want to understand how to read charts and really pick information out of what you see in the charts to help formulate trade ideas, and then learn how to manage your risk and everything, take my course, link in the description below. And again, if you are interested in ideas like this one that I'm about to go through, then join the private membership group. There should be a link in the description below on that. Or there should be a join button where the old subscribe button is, unless you're on an iPhone. Apple likes to block that. So for Apple and an iPhone, you got to go to the link in the description below. All right, so this morning, here's what I pointed out in Snow, all right, for the members, all right. On the hourly chart, I saw this trend line right here, okay? And we've been kind of watching this one for a while. And this morning, we were basically right here, back testing. So yesterday, or the last few days, we broke down. There is some support right here about 165, 166. You can see we got a reaction there, we got a low reaction there, another reaction there, several reactions. And so I figured that's support, but this morning we gapped up, we were right there. I let everyone know in the membership group that this was objective to short right here because of a couple reasons. One, we broke this trend yesterday. So it's sell the rip, because the trend has been broken. Rallies into resistance should be shorted. And then two, on the RSI, on the hourly, you've got the negative divergence. All right, so negative divergence, that's your last divergent high there. Broke trend, excuse me, back test into resistance. It's objective to short. And that's exactly what I did. And that's, what I told everyone in the private membership group. From there, it sold down to support, a drop of about 3.5%. You take that trade, you would have probably paid for half a year's worth of or actually, honestly, you would have paid for 3 years worth of the private membership group right there if you just took, not even that large of a position. You would have paid for the private membership group right in that trade. But all right, so then we sold down to support, and I've told everyone in the membership group that, okay, this is support. I'm going to cover my short trade, take my profit, and I'll just reshort the thing if or when it breaks support. Otherwise, maybe we bounce again. Okay, so that's it for the trade on that one until I see a break of that support line, which I think it will go. I think it is going to break. Okay, next up, Tesla. So Tesla, I've been talking about in the private membership group about this one as well, but here's Tesla, and this is what I like about it. This is an hourly chart, so we're just kind of narrowing it down to the near-term time frame, but on Tesla, I've talked about the negative divergence that's been in play, all right? So there it is on the hourly, on the RSI and the PPO. It's on the daily as well, but each one of these little highs, it's made an equal high, hasn't been able to really go much higher, but each one of those equal highs has been on less momentum. All right, so divergent high, and if you go to the daily, you'll see that there it is right there on the daily. Negative divergence on the daily chart. So those are divergent highs. Going back to the hourly though, we have this trend line right here to watch to signal the next breakdown. All right, support, support, support. There's another reaction, and we broke down. Okay, so we broke down, back test one. Today, they gapped it up over the trend line, making it look like it was going to recover. It wasn't super impulsive, but it was kind of hanging in there for the first hour or so. I pointed out, hey guys, it has recovered. Let's watch it. But I'm looking for downside, and sure enough, boom, back below resistance. So that's probably all it is. That's probably it for the Tesla. It's probably going to go lower now, but it could continue to back test. The point is, it's being sold at resistance, all right? And that trend line right now is resistance. So it looks like it's heading lower, and I'm sticking with the trade. I like it. On the daily chart, first target, 258. No, we'll call it 259. There's some support there, so you probably get a bounce. But bigger picture, I still have this in my sights, 184.50. Okay, on the daily chart, that is decent support right there, and I think we do this, and then probably chop around here, but I think we work our way down to that area of support. So I still like this. As a short trade. I'm sticking with it. Starbucks. So Starbucks on the hourly chart had some support right here at an 83. Okay, so we've traded there, bounced off of that, came back down, hit it again, bounced off of that. But look at the bounce. It's a lot smaller of a bounce. That's kind of that's reading the market right here. The fact that you're getting a smaller bounce the second time we're bouncing, we're pretty much heading right back down to the 90 or the 83 area. And I think it's likely going to break here pretty soon. I don't know if it happens today, but I don't think there's much more of a bounce up. It does look like we'll probably break. If I go to the daily chart, you can see, we're back below the 200-day simple moving average around 87.50. We had negative divergence at this high right here. All right, there's the negative divergence on the daily, and that's why when this price action was happening, it looked like stop rate kind of price action, and I stuck with it, stayed short. I covered some of my trade here at the 83, this tag, but we're back down to it. So it's objective to add to a short if you break the 83 area. An impulsive breakdown, daily close below 83 should set us up for a move down to the next level of support, about $80. And that's all I got on that one for now. Qualcomm. So Qualcomm, more selling today. Bigger picture on Qualcomm is this key level. I have it marked in blue. It's about 123. Lots of reactions on this level. And as I zoom out, you can see that this was support going all the way back to November of 2020. Okay, we've had multiple tags of that support line where it's held. Little brief undercut right here. They did have bullish divergence in play, and we recovered. So that was a bear trap, false breakdown. We could have another bear trap right now, but you can see as I zoom in, we're back below that. And I'm seeing some selling, so looking just for more selling. I'm looking for an impulsive breakdown here where it clearly just gives it up, and it's tells everyone that it's not going to be a bear trap. So I think we're going to get it. I'm looking for Qualcomm to head down to 110 for the next level of support. Likely get a bounce there, but at the end of the day, still looking for 93, 93.70, $98 for our gap fill. All right, there's a gap to fill. That's decent. That was resistance for a while. Should be support. That's my target for now. So I don't know. I think it probably does something like this. If I had to guess how it's going to play out, we come down, we hit that, probably bounce back up, hit it, come back down, chop around for a little bit, and then break down. Okay, First Solar. So First Solar, it's been a battle. The bull's still trying to hold on to this thing. I don't want to go down to the hourly on this one. I think on the daily, we'll just really chalk it up to that. We've been hitting this trend line resistance. So on the daily, you can see it's marked right here. So zooming in, we've been kind of just popping on this trend line, slightly making new highs. We've got negative divergence. All right. So I think we continue to, get sold into resistance and continue to trend lower. Again, my target on this one is gap fill at 77.75. I will not wait for the exact gap fill. I'll step in early and cover, but that's the target. And we're still looking for a trade down. It's about 40% down there, so I like it. And this is likely going to make a big red candle. It's going to probably take out a big chunk of these candles in a single day. That's kind of how I think it's going to play out. So I'm sticking with it. And then a very similar one at Run. You can see, they stepped in and bought it a little today. And then they just are selling it throughout the day. So still looking for downside, negative divergence. We popped over this trend line. This is key for me. You can see this trend line here. All these reactions, we popped over it, had negative divergence when we made the move over it, and we since failed. And we're pretty much selling ever since. So to me, it looks like we're heading lower. Minimum target on this one is gap fill at 24.27. And obviously you don't want to wait for the exact level. And I even have some Apple short. So Apple, the thing I'm watching on this one is this downtrend line on the daily. Okay. It's just downtrending. Now, if you go to the hourly, you've got some bullish divergence, just barely on the hourly. So kind of similar to the RSI on the triple Qs. And you do have some bullish divergence on the PPO as well. So Apple's kind of the last holdout. It's the castle, it's the Alamo for the bull. Anybody bullish, Apple I think is the Alamo. So, I'm shorting it because the bear market doesn't end until you take the generals out and shoot them, and Apple is kind of the last general. So I think there's more downside here. Looking at the daily chart, the downside right now, I pointed it out in my last video, but you can see here on the weekly chart, this is your bull market price channel in Apple going all the way back to 2009. We overshot that due to the Fed getting crazy. So I still think we are heading down to the top of the channel, 105-ish, 110-ish, depends on when we get there. And then we'll probably get a bounce there. And then ultimately to the bottom of the channel. Okay, but for now, just looking for more downside. Commodities. So commodities look like they're breaking down. And so this is DBA, a broad commodity index. What I got here is I've got a bear flag, and it looks like we're starting to break down. If you take the flag from the highs right here on DBA and go down to here, then you just mark it out basically at the point where you start to break down. Then you can see that that's setting us up for a forecasted target of 1759, and I have that level marked out as decent support. We had some reactions here. So that is the target right now, and I think commodities are going to continue to sell down here. Now, I do think if or when we get down here, the Fed will likely have pivoted at that point, and we're probably looking at a good area to go long commodities for the next higher in the inflation trade. I continue to think that the Fed, although they talk a tough game, they're not willing to put the market into a recession. They're going to, interest rates are rising, but they're not going to be able to rise over the level of inflation. So what's going to happen, at least in my mind, is rates are rising, inflation's going to come down as these commodities come down and oil comes down. You're going to see the rate of inflation come down, but it's not going to, the bond yields are not going to be able to go over the actual rate of inflation, and the Fed fund rate won't be over. The inflation will still be higher. And at that point in time, the Fed will have to ease off because the market will be, massively correcting or crashing or whatever, and then inflation will run again. It will run for the next higher in this inflation trade. So that's my trading plan longer term. That's all I got for today. Longer video. Wanted to get this stuff out, get my thoughts out there. Guys, drop me a thumbs up on your way out. I'm only getting a couple hundred thumbs up per video. I got several thousand people watching the video. Drop me a thumbs up. Let's get it over, let's just hit the thumbs up button. Let's try to help me out. I help you guys out. I'll catch you on the next one. Bye.